The S&P 500 printed a new historic high for 5 sessions straight. Yesterday, the index benefited from robust GDP growth in the United States in the fourth quarter. The Nasdaq and the Dow Jones also closed in the green. Investors cleared sentiment today following the PCE price index, US personal spending, and income data. You're watching a daily review of American markets with me, Ekaterina Stikhina. Yesterday, the S&P 500 extended its strength on the back of a positive economic data. The index rose by 0.53% to close at 4,894 points. The three major stock indexes pulled back during the New York pre-market. Futures on the stock indexes shed 0.2 and 0.6%, but they managed to win back some losses. The S&P 500 is expected to trade in the intraday category between 4,854 and 4,905 points. The economic data released on Thursday convinced the Federal Reserve that the U.S. economy is on a sound footing. The data also negated a recession scenario. The U.S. economy expanded stronger than expected in the final quarter of 2023 amid robust consumer spending. Gross domestic product grew by 2.5% in the whole of 2023, which came as a pleasant surprise for the stock market. Indeed, stubborn inflation did not discourage consumers from spending money. Thus, the fresh GDP data proves that corporate profits and retail sales are set to improve. The Labor Department reported that U.S. initial jobless claims rose to 214,000 last week, above the forecast for 200,000. After the release of data on the PCE price index, the preferred inflation indicator of the Federal Reserve, the stock indexes regained some losses. However, Wall Street indexes were not able to completely get rid of the pressure of the chip makers. Meanwhile, investors welcome the PCE price index as inflationary pressure has been moderating. Inflation fell below 3% year-on-year for the first time. Core consumer prices rose by 2.9% in December from a year ago, below the estimated 3% increase, and the index was the lowest since February 2021. This revives hope for a faster easing of a Fed policy, and core consumer prices, excluding volatile food and energy prices, grew by 0.2% from the previous months. The reading matches the consensus and an uptick higher than a 0.1% increase in November. The PCE price index climbed by 0.2% in December on a month, in line with the expectations. It grew by 2.6% on a year. In a separate report, personal spending rose by 0.7%, following a 0.4% growth in November. The reading is stronger than the expected 0.4% growth. U.S. personal income increased by 0.3% in December, in line with the market expectations and below November's 0.4%. Employee wages rose by 0.4%, slightly down from the 0.5% increase in the previous months. More broadly, there is growing evidence of a long-term return of inflation to the Fed's target level. Fed funds futures now indicate overall rate cuts by 140 basis points by the year end and a 50% chance of a first rate cut in March. As for the currency market, the US dollar was again forced to retreat, and the dollar index was down 0.3% to 103.17 at the time of recording this video. The US dollar index is likely to trade in the intraday corridor between 102.70 and 103.5 points. The greenback is in trouble again. On the one hand, the economic data indicates a strong economy and no prospects for a recession. This gives the central bank leverage to maintain restrictive monetary policy longer. Besides, the job market is still overheated. On the other hand, inflation is slowing down steadily, which could become an argument in favor of a rate cut in March. There is no clear answer to the question when to expect a dovish reversal. The series of data since the beginning of the year gave reasons not only for optimism. In any case, the solution includes: next week, traders will get to know a policy decision of the Federal Reserve. In the meantime, the US currency remains under pressure. The Canadian dollar was gaining ground against its American peer in the New York pre-market. The fresh inflation data only reinforced the looney's strength. Before the opening bell, the USD-CAD pair was trading at 1.3430 or 0.3% lower. The intraday corridor for the instrument is seen between 1.3380 and 1.3450. The Canadian dollar was able to strengthen on the back of rising oil prices on Thursday, and today the loonie is among the beneficiaries of the US dollar's weakness. Optimism regarding oil demand caused by strong US GDP growth and China's stimulus measures has upped away slightly today. Oil prices fell by 0.6 and 0.8% today. The decline in oil prices went almost unnoticed. Macroeconomic data and statements from the Bank of Canada indicate that the inflation in Canada is more stubborn than in the United States, so the likelihood of an imminent rate cut is lower than in the United States. And this is true for the time being. The picture may change by the spring meetings of central banks. The crypto market has perked up today. Popular digital assets were trading mainly in the green zone. Bitcoin managed to develop a steady rally. Bitcoin rebounded by 3% in the New York pre-market, and the token was trying to gain a foothold above 41,000. InstaForex analysts predict the following intraday corridor for the Bitcoin from $40,200 to $41,500. If the price settles above 41,000, the token might climb to retest 41,700 and 42,400. And an alternative scenario means a fall to $39,700 and $38,700. Our review of American markets is over. Subscribe to InstaForex TV channel and we will keep you updated on the daily market developments. Financial markets offer ample trading opportunities. Good luck in your trading and see you online next week.